JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 27th of September 2021. So yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, check us out here. Check us out here on jfdbank.com and click on the research tab right there on the top. So now then, guys, jumping into the charts. Just bear with me one moment. Okay, so now then, jumping into the charts, guys. The first one I want to pick up here is Nikkei 225, and yep, you can see that the index pushed nicely to the upside today. However, it's currently trading slightly in the negative territory, but it's still above this little short-term tentative downside resistance line taken from the high of the 14th of September. I talked about this one last week, and what I said, that if we pop above it, then there's a good chance that we could see a push further north. Well, at the moment, yes, that seems still to be the case. We could still drift further south, further north, if we remain above that downside line, and this 30,242 level right here, marked by near the high of the 8th of September and near the low of the 13th of September as well. So keep that in mind, and then slowly, yeah, we could continue grinding higher, where our next target initially will be, well, it won't be this one, but instead it will be this one right here, the current highest point of September, near the 30,796 territory, approximately around there, or a break of it, yeah, of course, would confirm a forthcoming higher high, and potentially more buyers could join in. But that's a little bit later. For now, let's see if the price will continue trading above this downside line. Now jumping into Hong Kong's Hang Seng Index, a slightly more grim picture here, I would say. The index is still kind of struggling to bypass this little short-term tentative downside resistance line taken from the high of the 8th of September. You can see that we had a few attempts here last week. Today we also did get an attempt to do that in order, to break this downside line, but unfortunately for the bulls, they didn't have enough steam here, and the index drifted back down. However, still it remains in positive territory. So let's see how today's or should I say tomorrow's trading session is going to go through. We still have around 50 minutes left of trading on this one today, but I doubt that something, let's say, drastic would happen here, and maybe it's kind of save itself for the next session. Now, in order prefer to, let's say, consider the downside on this one. I mean, because again, we are still below these downside lines here, so in a way there's a possibility that this could drift lower. However, I will take a careful approach here in terms of the downside on this index, because again, I would prefer to maybe see a drop below the 23,771 territory right here, which is the current lowest point of September. If it doesn't happen, if the drop here below this level doesn't happen, then, well, I mean, maybe the bulls could still have a bit of hope here. However, a break of this downside line here would be needed in order to kind of start aiming for the other downside line here. But again, let's go slowly on this one, and let's keep an eye on this little short-term tentative downside resistance line taken from the high of the 8th of September. Now jumping into DAX, and here you can see the index on Friday it drifted back down. It closed in the negative territory, kind of forming this possible island reversal here. As you can see, we have a nice little doji here, which is, like I said, that possible island reversal pattern, kind of part of the possible island reversal pattern. However, let's not rush into anything in that sense, because the cash index, for example, right now is making its way higher. It's currently trading at around 15,690 territory. So basically, it's nicely above Friday's close, and it's coming. Yep, it's very near this the high of last week. The high of last week, which is roughly around that 15,695 territory. So basically, we are currently sitting near this downside line and near this the highest point of last week. If that gets cleared, well, guess what? I mean, we could start aiming for the upside again, and maybe even we could go for the. Let me just put this one on the chart. We could then maybe go for the high of the 17th of September near the 15,792, or maybe towards the all-time high near the 16,030, and then we'll take it from there, of course. Now, in terms of the downside on this one, well, I mean, looking at the whole picture here, I would actually prefer to wait maybe for a drop back below this 15,454 territory right here, just to be a little bit more on the safe side, and then yes, we could consider maybe lower levels. Now jumping into Dow Jones Industrial Average, and here you can see that the index on Friday did make its way higher a little bit. Most importantly, it managed to stay above the 21-day EMA, and basically that means it stayed above all its EMAs. This way, kind of potentially attracting more buying interest, or should I say, could attract more buying interest. The cash index is also pushing right now higher, and it's above already that psychological 35,000 mark, slightly above it, but yeah, that will do, I think. So at the moment, like I said, we are slightly above that that psychological 35,000 mark on the cash index. This way, kind of, it's showing, the index is showing that, well, there is maybe it's not really done with the upside yet. So let's keep an eye on that one, and let's continue targeting higher levels. As I said, as I mentioned previously when I was covering this index, if the price remains somewhere above that psychological 35,000 territory, then yes, I'll continue targeting the upside. My next target will be this 35,510 zone, marked by the high of the 30th of August, or we could aim for the current all-time high near the 35,631 level here, which is the highest point of August, and then we'll take it from there, guys. Now DXY, the dollar index, and here you can see that the currency, or the currency is kind of actually DXY, the dollar index here. You can see that it's still hanging above this 92.98 level, which is the low of last week. So we're kind of stuck here in nowhere, and to be honest, at this point, although we are trading above this upside support line taken from the low, the 3rd of September, I would rather wait for a push above the high of last week near the 93.52 level first, and then kind of aim for some higher levels. So yep, let's keep that in mind, guys. For the downside, a break of this upside line would be needed in order to consider maybe some likely lower levels. Gold is trying to go for another recovery here, another retracement. So you can see last week, for example, in the beginning of last week, we saw this nice recovery here where we saw a move towards the 21-day EMA, which is not far from that downside resistance line taken from the high of the 3rd of September. It got a hold up here and then kind of sold off again and drifted lower, but found support near this 1741 zone. So so far this level is doing its job. It's providing a hold up. Yep, we're seeing now a nice little retracement. But if the commodity stays somewhere below this downside line, then well, maybe another slide could be possible, guys. So let's keep that in mind. But if you're a little bit more on the cautious side, what you can do here is just wait for a drop below that 1741 zone, and then aim for lower levels. In terms of the upside here, now what I would like to see here is, first of all, of course, a push through this downside line, and then also move above the 1787 level marked by the high of the 22nd of September. This way there potentially could be more buyers to that could join in, and yep, we could see a move towards the 1809 level or even higher. But again, I would rather wait for the push above the 1787 territory before considering the upside. WTI oil here, and you can see that the price continues to move nicely higher. What I told you last week was that if we push above the 73.11 zone, then my next target is the 75.47 area right here, marked near the highs of the 13th and the 14th of July. So far, I mean, the kind of, I would say, mission accomplished, because it did almost reach that levels, but we'll take that as an achievement, to be honest. Now we need to see if it'll continue rallying. So for that, if you want to be a little bit more on the safe side, then certainly wait for a push above this this barrier right here, the high of the 13th and the highs of the 13th and the 14th of July near the 75.47. If we clear that, then yes, we'll go for further upside. In terms of the downside on this one, in the near term, well, if it suddenly falls back below the 73.11 territory right here, marked by the high of the 15th of September, yep, we could consider maybe a bit of a retracement here, maybe move towards the 21-day EMA, or maybe even towards this 69.88 level. But again, let's for now, I'm leaning a little bit more towards the upside, especially if the price pushes through this 75.47 level. Quick update on Litecoin, guys. So yep, we had a good run, well, we had a good run here on the 24th, on Friday, to the downside during the weekend. Stalled here. This morning we're seeing a bit of a kind of a move back up. However, we're still below this so-called neckline of the possible head and shoulders pattern here, the one that I talked. But if you don't like that pattern, if you don't really kind of focus on it, you don't want to focus on it too much, I mean, you can keep an eye on this little downside line right here, which so far is doing its job. It's providing resistance. This downside line is taken from the high of the 6th of September, and if it continues to do so, if it continues to provide support, then yes, resistance, then yes, another slide here might be possible. But for those who are a little bit on the cautious side, what you can do here is just wait for a drop below this level, or I should say this area, which is between the 142 and the 145 levels, and then yes, especially if it drops below this 142 territory, then yes, this will confirm a forthcoming lower low, and we could slowly continue grinding lower. AUD NZD. So finally, guys, and I've talked a lot about this pair last week, and yep, finally we have our breakout above this downside line, above the 21-day EMA. So yeah, so at the moment I will remain positive, guys, because again, here we have a nice move here already above this 21-day EMA. If it stays above that, then yes, my next target is a little bit higher here. I'm keeping an eye on this 1.0418 level, which is the lowest point of December of last year. However, it might overshoot it easily, and the next potential target could be this the highest point of September, the current highest point of September, near the 1.0454 area. And then we'll take it from there. Now, jumping into a few of these exotic pairs that I do like to look at sometimes, and one of those is US dollar against the Turkish Lira. As you can see, the pair on Friday it went for a new all-time high here. Today, this morning, let me just double check. So yep, it did form a new all-time high. So basically what I'm gonna do, but kind of drifted back below the previous all-time high, but drifted back below Friday's high very quickly. So what I'll say here is that if if this barrier here continues to provide resistance, this 8 let me just zoom in here a little bit, 8.8918 area, if it continues to provide resistance, then maybe a bit of a retracement here back down could be possible. However, if we pop nicely above it, then yes, this opens the door maybe even towards that psychological 9 territory. But again, let's not rush into anything for now. Yes, it is looking quite interesting. It does look a bit maybe overstretched here to the upside. However, we've seen this this pair moving in one direction for quite a while, so so yeah, don't really jump into those shorts, guys, yet, because again, at the moment we haven't really received that reversal signal yet. So let's keep an eye on that one. US dollar against Japanese yen. So just a quick update. So yesterday, last week, I talked about this 110.80 zone, which currently is doing its job and provides resistance. So if you want to aim for some higher levels, certainly a break of that level would be needed. At the moment, I'm just observing this one. I'm more bullish than bearish on this one, but I would like to see that pop above this 110.80 zone. For the downside, if suddenly it falls back below the 110.16 level and falls back inside this little triangle, then well, that's where I'm going to aim for the downside. US dollar against the Canadian dollar, and here we can see a nice break of this upside line. So this arrow here didn't really work out, so yep, we didn't really see that rebound from the short-term upside line, so we can get rid of, or actually let me just reuse this, because we can get rid of this upside line, no longer needed. And what I'm keeping an eye on, of course, is this other tentative upside line taken from the low of the 1st of June, this medium-term upside line. And now we can reuse this this arrow here. If this upside line provides support, then yes, a nice rebound could be possible. However, given that oil is kind of on a rally now, maybe this pair could break this upside line and then push further south. However, if by any chance WTI oil makes a pause and maybe it corrects a little bit lower here, then maybe yes, we could see USD CAD rebounding here, and from this 200-day EMA, which kind of like almost coincides here with this upside line, it could rebound and it could make its way up again. However, However, at the moment, the only suggestion here is to keep an eye on this one, because another thing to potentially consider is maybe, just maybe, again, maybe it's not going to work out, but I'll mention this still, because maybe it could be seeing here a possible head and shoulders pattern as well. So we have our left shoulder here, we have the head, and if we rebound from this upside line, yes, it could move to the upside. However, if it forms this right shoulder and it forms this lower high, and it could drift back down, and then yes, we could see this one, and you could see this one drifting even deeper to the downside. But again, that's for now. Let's keep that as a secondary idea for now. I'm keeping an eye on this upside line, and I want to see if it's going to rebound from it or not. Quick update on GBP Aussie. So of course, Australian dollar is picking up the pace. Here, GBP Aussie, we're seeing a nice little move to the downside. However, this 1.8762 territory somehow is still doing its job and providing support. In order to go for lower levels, obviously we need to see a break of this support zone, and then ideally we'd also like to see a break of this upside line taken from the low of the 10th of May. But again, if it holds, if it still does the job, so maybe a nice rebound here could be possible. However, like I said, from the very short-term perspective, I would say if it falls again somewhere below this 1.8762 territory, yes, I'll aim for the downside. I'll aim for the lower levels, but only up until this upside line, and then I'll just have to review everything again to see how it performs near this upside line. If it's showing willingness to break it, then yep, maybe we could see deeper declines, but if it rebounds, well, maybe we're not really done with the upside yet. Yeah, euro against the Russian ruble here, also one of those exotic ones, and I do like to look at these sometimes because they're sometimes quite technical. And here specifically, you can see that we are trading right now near the current lowest point of September. Let's see if we can form a new low for September here. And the current lowest point of September is roughly around that 84.99 level. If you want to round it up, you can use the 85 zone, but a nice drop below this 84.99 zone, yes, would confirm a forthcoming lower low, and my next target could be this high, the 22nd of April of 2020, which is around the 84.28 level. And then we'll of course still take it from there. For the downside on this pair, well, we do have this downside line right here, which so far is doing its job in providing resistance, although we have a huge kind of space here. Recently, as you can see here in September, it tested, well, it kind of would say it formed. It got a test here, and then yes, we drew this downside line, and now it's on the 21st of September last week. It did test that downside line again. So kind of this way, proving that there is some sort of a pattern here. So in order to aim for the upside, of course, a break of this downside line would be needed, guys. So keep that in mind, but at the moment I'm leaning a little bit more towards the downside, especially if oil continues to rise. Then, well, I mean, we could expect this pair to drift a little bit more to the downside. And finally, EURUSD. This one's still stuck. It's still stuck between my levels here, the ones that I talked about last week, the 1.1685 and the 1.1755. I'm waiting for a clear move out of this little range here, this little consolidation area. So that's why for now, for me, it's a tricky one. An interesting thing to keep in mind here, basically. So I don't know if you have looked at these patterns before, but basically there is one pattern which sometimes also means a reversal signal, where, for example, when we have a decline like this, but then we form a somewhat of, let me just actually check if we have if we have something. There we go. I think this might do the trick here. So let me just remove these lines. basically this pattern is called a diamond reversal pattern. But let me just put this one on the chart. It's not really an ideal one. I mean, it's something just to kind of keep in mind, basically. So so something like this, guys. So it's basically like a diamond, basically, and that's why it could mean that we could be seeing here a nice little maybe a reversal, potential reversal signal. So, however, we do have this downside line as well, which we're keeping an eye on. That's taken from the high of the 1st of June. We'll still, of course, continue monitoring it, but yeah, I mean, at the moment, even if this idea is correct, if we do pop higher, it could be still enough. So yep, for that idea to work out, because again, we still have plenty of room here until we could reach this downside line. So basically what could happen in the near term, we could see a pop higher here and move north, a test of this downside line, and if this downside line provides resistance, another slide could be possible. So again, but like I said, for now, and in terms of this idea, keep it in mind. But don't really focus on it too much. Like I said, just let it let it sit somewhere in the back of your head, because either way, even if it, let's say, does pop higher, I would still prefer to see a push above the 1755 level in order to get a little bit more comfortable with the upside. In the near term, in the short term, up to this downside line. So that's the idea. So yeah, guys, that's it for the session. I really hope you found it useful. And just to let you know that there won't be any Traders Espresso videos on Wednesday, Thursday, and Friday. There will be one tomorrow. So yep, join me tomorrow, as always, at 6 o'clock GMT time. But yeah, guys, for now, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.